Welcome to Central Bank Central. I'm Kathleen Hayes. Today, we take a look at Japan. A lot going on these days. Japan's new Prime Minister, Sanai Takaichi, has only been in office for about a month. Already, her long promised plans to boost Japan's economy via aggressive government spending and stirring up markets and leading the key Bank of Japan officials to open the door, it seems even a bit wider, to rate hikes. At the same time, the yield on longer term JGBs hit their highest levels in more than 20 years on Friday. This in a week that started with a big meeting with Governor Ueda from the Bank of Japan and the new Prime Minister. The yen hit its lowest level since January. So I'm very happy to be welcoming to Central Bank Central today for his very first time Mark Farrington. He's a longtime BOJ watcher. Can you talk about maybe the mid 80s? He's the author and creator of the Watchtower series on Substack, including the BOJ Watchtower. Started his career, in fact, in Tokyo, working in markets. He's been managing money in global financial markets since then. So, Mark, it's great to have you on the show.
Thank you. Good to be here.
Wow. Well, a great time for you to be doing what you're doing and starting this BOJ Watchtower when, we had so long for under Governor Kuroda. That was a very big transition. In fact, a lot of people are still talking about for the BOJ is normalization from extraordinary monetary stimulus to where Governor Ueda is now. He wants to normalize inflation rising, et cetera, et cetera. So when you take a look at the beginning, this first month, where is where is Takaichi? Where's the new prime minister now? And how would you categorize or describe what she's accomplished so far? What's the big challenge in front of her?
I guess she would, her friends or inner circle would be, congratulating her on, resurrecting Abe economics in her new form because they pushed through a very large supplementary budget, and she's, updated all of the organizations that Abe had created to help him implement the three arrows. So she's rebranded it as the three pillars, but it's essentially, focusing on this industrial policy third arrow that Abe didn't have a chance to finish. And she's got to work on that straight away. So I think she would be happy with that as an achievement. As a as a potential failure is that it hits the market at a time when everyone is worried about limited fiscal space, when everyone is concerned about the BOJ being so far behind the curve, and inflation, continuing to overshoot the target for almost 4 years now. So the market's not in the mood for the first two of Abe's arrows, and it wasn't made very clear by Takaichi that she's going to pay respect to that.
So, following on a bit more on the fiscal stimulus and the package, certainly the size of the package that she's put on the table, is it too big? How would you describe this? And in terms of politics, how easy is it going to be to get it completely through? Is that a done deal?
Yeah, it's definitely too big in my opinion, and I think the markets sent that message back to Nagatocho as well. As you mentioned, bond yields up to new highs, 3.4% on the 30 year, and the 10 year at 1.8%. Japanese yields are now above Chinese yields. Japan is not the low yielder in Asia anymore. And even the stock market is down 7-8% since earlier in the month. So the market considers it to be too big, in my opinion. It's the largest supplementary budget since COVID. And so you have to ask yourself, with corporate profits at historical highs and the Nikkei at historical highs and GDP more or less on trend, why do you need the largest supplementary budget since COVID? So I think that's been the feedback to it. And you're right, she doesn't even with the coalition, they don't exactly control both lower and upper branches of parliament. So there will be pushback by the opposition, and hopefully it will be streamlined. The budget started out at about 65 billion and then ended up doubling in the course of a week after a series of meetings. So, reducing it by 10-20% would be taken positively by the market and also potentially show the rest of the parliamentary opposition parties that Taikaichi can work with them.
So in terms of there's a lot of again a lot of pieces of this puzzle, a lot of places to jump around, but I'm thinking also of
Yeah.
this past week when we had at least two board members, BOJ board members, looking at what's going on and suggesting that they're very open, at the very least, to starting to tighten policy. And of course, that's what people been talking about for a while. I mean, before
Yeah.
Takichi got elected, I think there are many people still saying, hey, the October BOJ meeting might be live. Um, and that's this pushback from the BOJ or push forward, maybe I should say. How do you interpret that? What is the BOJ trying to say, and to what extent can they move forward?
Yeah, you're right on that. So the case for rate hikes was pretty much in place in September, in advance of the September meeting, and we even all reacted to Governor Ueda's speech that he gave at Jackson Hole, where he was emphasizing that the labor shortage is actually now a source of inflation, regardless of the pace of growth. And also, the IMF had revised up growth, and most people who had overreacted and reduced their growth forecasts in the April-June quarter following the tariff shock, they had all reversed their forecasts and taken that little dip in demand out of the forecast. So inflation had been revised up, and growth had been corrected since Q2 before the September meeting. And as a result, we've had two meetings back to back with two dissenters. And that's never happened in history for the BOJ. At least two dissenters for tightening. There has been dissensions for easing back in the early days before QE, but in terms of tightening, it hasn't happened. So that should have carried more weight. Ueda didn't exactly give enough airtime to that, in my opinion, in his press conference after the October meeting. And also, as we've seen a third board member this week give a speech, Koeda, the newly appointed board member in April, she has made it very clear that she's willing to vote for a rate hike in December. So now we have potentially three board members on record to raise, and yet Ueda's not signaling, which is what the market is waiting for.
Well, how did you take his message coming out of his meeting with Takaichi? I believe that was what, the beginning of the week. Uh, he seemed, if you could just from a very great distance say, he seems a little tentative. He's doesn't want to be, he kind of wants to agree with her at the same time, keep the door open for the BOJ. You've been watching these government officials, Bank of Japan officials for decades.
Yeah.
How does he seem and sound to you right now? What is his position?
Well, I actually picked up the change in tone and confidence level from last year in September, where the BOJ had to do some recovery after the rate hike at the end of July that led to the big stock market sell-off in early August last year, and they were criticized for having not, telecasted that and communicated well. And so Ueda and other BOJ officials were out on the wire saying, "Yes, we can do a better job of communicating. We'll focus on that in the future." Because they were in a position to raise rates again in October. And then yeah, a new prime minister came along in October last year as well, and signaled that now is not a good time for rate hike. And I think that really took the wind out of Ueda's leadership, and he has been very deferential and very indecisive since. We stumbled over the rate hike last year, should have been in December, but got kicked into January again out of this micromanagement from the cabinet office. So I think Ueda has not recovered from that, and perhaps understands that his role has become much more of a liaison and a bridge to the cabinet office rather than, say, chief economist and chief thought leader for the BOJ. And so I think you're seeing the deputy governors and the board members being allowed to speak truly as a central banker. And Ueda is putting his politician's hat on when he speaks now and being careful not to say the wrong thing.
Well, speaking of hats, why don't you put on? your political science hat. Why don't you put on your hat that talks about, central bank independence has been a huge theme around the world, right? Out in Jackson Hole, in Washington, everywhere we look in the US and the Federal Reserve and in other countries as well. Japan has a somewhat different history. It has a somewhat different structure. Talk to me about what people who are maybe only recently covering, following the BOJ, or people who are now going to follow it more closely because of so much that's going on with this new prime minister. How is this question different to you've got Article 3, you've got Article 4, people can tell you a lot. Explain to us how this works.
That's a fantastic topic. I think that's the topic that has motivated me to write a lot about the BOJ this year because I find it fascinating. And I think the right framework to have it as an analyst or a market participant is to understand what the BOJ was like through the 80s and 90s up until the revision of the Bank of Japan law in 1997 under then Prime Minister Hashimoto, who was, launching a kind of big bang financial reform following the banking crisis that they had in Japan and the Asian financial crisis in his region. And one of the, signature pieces of the reform was the Bank of Japan law, which was aimed at liberating the Bank of Japan from the Minister of Finance, not from the cabinet, because the BOJ was always under the thumb of the Minister of Finance, and the Minister of Finance caught a lot more criticism for the bubble economy and the lost decade than the BOJ did at that time. And it was thought that if only the BOJ could be liberated from the Minister of Finance, it would be able to lead the country out of deflation, etc. So that was a very important revision, and it did allow this broad, diversified monetary policy board that we have now. And you did see the BOJ begin to converge a lot more on the global standard for G10 central banks. But then, of course, what really happened was then the global financial crisis, Japan slipping into deflation and negative rates, and then this big need for reflation that came under Prime Minister Abe and the appointment of Kuroda as the governor of the BOJ. That sort of 10-year period where Abe economics and the three arrows were being promoted, and Kuroda as the governor completely altered everything that was meant to be achieved by that revision of the BOJ law back in 1997 and this convergence on global best standard, if you can use that term for global central bankings. So with Kuroda, retiring and entering his term in 2023, Ueda being onboarded with and given the mandate to normalize and put a line under that period, we are slowly, incrementally working our way back towards the normalization of the central bank, including its autonomy and independence that were enshrined in that Article 3 revision in 1997. We're just not there yet. So it's unbelievably confusing because we're working in that direction. And while the BOJ managed to liberate itself from the Minister of Finance back in 1998, it got put under the thumb of the Cabinet Office during the Prime Minister Abe era. And so with Taikaichi coming back, a lot of the same people are around her and a lot of the same ideas are shared. They still view the BOJ in a subordinate role that should be towing the party line and collaborating with the policy intentions of the cabinet office rather than running an independent, autonomous monetary policy. And that's the dilemma we're faced with right now.
Well, where does that go next? Who's going to push, who's going to pull, especially when you have markets kind of pushing back, right? You don't want to see the yen go back down, you don't want to see 160. And so that's been in the past, what several months ago when there was that huge volatility, that was the level that seemed to be the mark for the BOJ, for the authorities of various kinds to step in and do something. When you have
Yeah.
the yields rising like this, I mean, what kind of pressure does that put on?
Well, if you had an extremely strong, sort of stubborn character as the BOJ governor, you would be seeing a lot of verbal pushback from him, but that's not Ueda's style. He's a soft-spoken, academic intellect who, prefers to do his work quietly in the office, not in front of the camera or pounding the table in meetings. So it's not likely to come from him. The BOJ has the legal argument on its side. So if push came to shove, it really could resist and it would be upheld in terms of legal interpretation. So I'm looking to members around Taikaichi, like the most I'd say balanced viewed members of her cabinet. Kiuchi, who is the head of the Japan Growth Strategy Group that she created. This is this evolution again from Prime Minister Abe's, Japan Rejuvenation Group that he had created. So she's called the Japan Growth Strategy. It's a coordinating body. It sits alongside the CEFP, which is a Council for Economic and Fiscal Policy. And for those who don't know what these groups do, imagine like the Council of Economic Advisors in the U.S. and the National Economic Council combined together making the policy advisory and recommendations to the cabinet office, to the executive office. That's their role. But in Japan, it's less of a research role and more of a coordination role. So Kiuchi is this key guy who's chairing these two councils and coordinating all the input. And then also coordinating the implementation of the policy. So this is where the supplementary budget that was first floated by Takeichi and Katayama, the finance minister, as 65 billion suddenly grew into 135. It got into
Wow.
that meeting format, and all of the stakeholders in that meeting were like, "Well, what about this? What about that? What about this?" And so Kiuchi is the one I think who really needs to exercise the control and authority and help Takeichi to control all these different stakeholders that she's invited to be involved in the decision making.
So in terms of the communication we're getting right now, uh, is this mostly talk now? One official recently said, one of the government officials in Japan, oh, well, no rate hike until at least March. And again, we have BOJ board members looking at inflation, looking at these, and maybe even inflation expectations, right? If that's becoming a problem,
Yeah.
and how that's then going to is Governor Ueda's caution and somehow maybe called diplomacy, I'm not sure, to move going to be what prevails, do you think? Is there any chance that, I mean, should markets just forget about it? You're really not, you're no chance of seeing any kind of moves unless something happens more dramatic, like the fact that the yen's been hit hard. I think it's bounced back a little bit over the past 48 hours, but is
Yeah.
that something you've watched? What would you tell your clients? What are you saying on the BOJ watchtower? What should we expect?
Well, I'm putting faith in Ueda. I would say I've known Ueda for a long time, particularly during his first term as a monetary policy board member back in the sort of 1998, 2005 period, where he was the architect of the QE strategy and a lot of these intellectual leaps that the Bank of Japan needed to make. He's quiet and diligent and convincing over time. So I think he's playing his role, which when he attends these coordination meetings with the cabinet office, he's essentially the country's chief economist. His job is to tell them this is the state of the economy. His job is not to tell them what policies to do. So he's there when anybody has a question about inflation or growth outlooks or risk from America, then they turn to Wade and say, please, what do you think? So that's his role and his purpose for being there. But what he needs to do then is to quietly explain each time he's called upon to speak to all of the politicians and bureaucrats that you have a much better chance of getting what you want, which is fiscal stimulus, innovation, industrial policy, and reform if you don't blow up the financial markets, and that the way to do that is a modest fiscal spending in a scenario where, Japan already has the lowest sovereign rating within the G10 and the yield curve. I mean, 30-year yields are not just high, they've been selling off every year for 11, or every day for 11 days in a row. So he needs to warn them that, this can get out of control. And so let us anchor inflation, let us anchor the yield curve, and let us anchor inflation expectations by normalizing. And that will have absolutely nothing negative to impact your strategy on industrial policy. So this message needs to be communicated because there's too much of this old thinking where Abe's thesis was you need monetary policy, fiscal policy, and industrial policy all pushing on the accelerator at the same time in order to get an outcome. Now the message has to be we're neutral on monetary and fiscal policy, and all of the acceleration is on industrial policy and reform. And that message is not yet clear amongst the cabinet.
Do you get any sense that talking to yourself, maybe whatever she's pushing for initially, that she may be ready to see that that's the kind of compromise or the kind of agreements she's going to have to have with the BOJ, have to have with away than these other teams?
Yes, I think she needs to believe it, and she might be one of the first. I think she trusts Katayama, the finance minister, very much. You know, she promoted her and put her in this position as the first woman finance minister along with her. They were both young prodigies under Abe together, and so they've kind of come up together. Um, and I think she's counting on her to cover the market risk and inform her whether it's bad or not. But like I said, I also think some of the big picture leadership roles like Kiuchi, who's coordinating body, he needs to get that point for sure. And all new presidents or prime ministers are overconfident until they get massive pushback. We saw that with the Trump administration. After Liberation Day, the markets gave them a proper whacking, and then suddenly some of the louder voices from Trump's administration were missing, and Treasury Secretary Besant was out in front speaking and soothing and calming the market. So we're gonna have that same response with Taikaichi, not only in the finance area, but you see already in foreign policy area with the comments about Taiwan, etc. So, you know, it's baptism by fire when when you're put into the office as a prime minister, and she will learn and she will adjust.
Well, I'm glad you mentioned foreign policy because that's one of the things I wanted to ask you in terms of the economy for Japan and the outlook for thing. I mean, China telling tourists not to go to Japan. Does that affect growth? I remember under Abe, I believe it was when he decided to speed up the tourism right into Japan. That's been a very
Yeah.
big factor for growth. And is this a threat, a real threat, do you think, from China to Japan, or is it just kind of a soft economic jab? How do you look at that?
Well, I have to say, like this year, 2025 might go down in history as one of the worst years for China policy execution. We were using the term, you know, own goal when China, you know, announced all the export controls on critical minerals because that just pushed the world into consensus on the risks of dependency, and it completely supported the Trump administration's view. And I think earlier in the year, the efforts to sort of wrestle control of the global south from, you know, India and Brazil and other members like that, and catering too much to the Russian message in BRICS led to subdivisions within BRICS. And then now the way they're responding to Japan and Taki's comments, I think is also another own goal because there's a backlash against excessive immigration in Japan right now already. The fact that the Chinese are going to voluntarily cut their quota will be only cheered on the streets of most of the over demand locations in tourism. But I think like you know offering to put back the seafood imports and then cancel them, that's going to have a negative fact. I've seen a lot of comments from businessmen saying we're just not even going to try anymore. I mean, China is just too unpredictable and unreliable as a trading partner. We can't build our business strategy around them. Now, interesting, that's the kind of criticism that everybody likes to make about Trump and the announcement of Trump policies. But this is what the Japanese are saying about China. You know, we cannot safely build a business strategy around China anymore because they're just too unpredictable. And so I actually think it's, you know, Takeshi just has to weather the storm. I would flag that I consider that mistake that she made as evidence that there are too many powerful voices in her cabinet at the moment, which need to be dialed down because it looks very much like it was, you know, Kihara, her cabinet secretary, who
Okay.
would have been pushing this line of speaking. as an extreme, ultra right hawk within her cabinet, but someone she relies on and depends on very much. He needs to be dialed down in terms of his language, and it will
Right.
then trickle down to her dialing down her language. And I think the
Okay.
same will happen on the economic side. If those around her say we really need to pay respect to the markets and dial down our tone on fiscal easing fiscal policy, then she will start to replicate that language. So I don't blame her specifically. I think it's like the echo chamber she's in.
Okay, I'll ask you one more question because as you know that the closer we get to the BOJ meeting, it could just be the last 24, 36 hours. We're going to get one of the major Japanese newspapers giving us something they know about what is or isn't going to happen, right?
Yeah.
So, what are you going to be listening for? What are you going to be taking as a signal? Aha, the BOJ has sent the message. It's on the table, and maybe there is a chance, or that for right now, for this last meeting of the year, they're saying not yet.
Well, the language that they've been using is this, underlying inflation being sustainably above 2%. So they haven't surprisingly used risk management language like fears of inflation expectation being disanchored or concerns of the volatility in the financial markets or weakness of the yen. The type of risk management flags which are really flashing red hot that they should be talking about. Instead, they've been really sort of monotone on the underlying inflation trend, underlying inflation trend. So I think that it'll be as simple as Ueda just saying, we now have enough data to confirm that the underlying inflation trend will now be sustainably above 2%. We'll also get a revision up in the growth forecast for this year as a result of the supplementary budget. It's 3% of GDP. It's a big boost to growth. And as I mentioned, already they've revised up the weakness that they had expected from the tariff shock, which never happened. So the growth forecast has doubled since April already. And so now they could revise GDP up to be 1%, 1.2%, which would be above trend. And so acknowledging that growth is above trend, and therefore we have a higher confidence that inflation will
Mm.
be above 2%. The wage growth story is really kind of already out there. They've been saying that they feel very confident that wage growth will be 5% in the spring negotiations round. So that wouldn't be any new news. So it's just these other two areas, growth and
Okay.
underlying inflation, that they could correct.
Let's look again at foreign exchange intervention. Let's look at a yen that has fallen so closely to what was, I mentioned earlier, 160, dollar yen is supposed to be the point that in the past, recently, more recent past, pushed the BOJ to jump in and stop it. What's going to happen now? And does this even have ramifications for the US?
Yes, I've been writing about it the last few weeks because I do think the risk of intervention has risen, and in fact, I think it makes sense for once. So, and actually, it makes sense for the U.S. to help lead on it, or at least be willing to do coordinated bilateral intervention with the Minister of Finance, because slowing down the weaker currency gives more time for the BOJ to normalize rates. It will take away some of the volatility at the long end of the yield curve, and it will let the market know that there is a bit of a backstop there. The backstop was moved from 145 50 in 2003 up to 55 60 in the last year, but there's still an approximate backstop there. And I really think it's important to let the market know that that's it, that we really don't want to see dollar yen go above that level.
Well, Mark Farrington, thank you so much for joining us on this Sunday. Boy, we couldn't wait to hop in on all the things that happened last week and what might be happening ahead. So thank you so very much for joining me.
You're welcome, and we'll see what happens.
Oh, let me remind everybody, Mark Farrington, longtime BOJ watcher, author created the Watchtower series on Substack, including BOJ Watchtower. I'm Kathleen Hayes, and this is Central Bank Central.